Welcome to part two in our series on index investments. And in this episode of the Wealth Nation podcast, I'm giving you my 5 index investment picks.
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all-around financial wellness. Here is your host, Yolanda Rose.
Thank you for joining me on another edition of the Wealth Nation podcast. I am Yolanda Hari Prasad, Wealth Advisor, and it is my goal on this platform to give you easy, actionable tips, content, and strategies that you can use to manage your money well and to build generational wealth. So this is part 2 of our series on index investments. And if you missed the last one, please go back and check out what I had to say, giving you an introduction about index investments. And we're going to kick off here today. But before we do that, I would love for you to give me an honest review on whichever platform you're listening to us right now. And most especially if you're on Apple or on YouTube, please just drop it in the comments. Whatever it is that you think about this podcast, just type it up for me real quickly. It just helps me reach more people just like you, whom I can help a little bit more. Also, link up with us on our various social media platforms: YouTube, LinkedIn, TikTok, Facebook, Instagram. Plenty of stuff happening. Lots of really cool content in smaller segments for you to digest on a regular basis there. The Wealth Nations podcast is sponsored by Solomon Wealth Management. Solomon Wealth Management is an innovative team of wealth managers that addresses the entirety of your life, your family, your business, your future, one facet at a time. We use our skill and expertise to the consideration of what you have accumulated, how best to administer it through life's changes, from financial counsel on managing your wealth to careful contemplation of how to transfer it to future generations. It's your vision combined with our skill and expertise to help you reach financial excellence. Reach out to Solomon Wealth Management at www.solomonwealth.co.za for a free wealth management consult. So today I am going to tell you about 5 index investments that are available to South African investors that you need to consider into incorporating into your investment portfolio. So if you don't already know about these funds, they can easily be included into what you currently have. Or even if you want to start something new, pure offshore based, these are some great recommendations. So everything that I'm sharing with you today, everything happens offshore. And what is nice about that is you can enter these investments on a South African platform because they are South African registered, South African traded, but the actual action happens on an international platform, and that's where the growth happens, that's where the profit happens. So that's quite nice. So in South Africa, every South African is allowed an annual offshore allocation of 1 million rand, and if you want to exceed that, that's capped at around 10 million rand. You're going to have to, once you exceed your first million, you're going to have to speak to the Reserve Bank, get the required permissions in order to take your money offshore. However, with my recommendations today, go into these sort of investments. That being said, just a reminder that the contents of anything I put out online, including this podcast, is not financial advice. It is financial education. So do not just literally take whatever I say out here and implement it without getting professional advice from a fit and proper South African financial advisor. All right, so take what I give out in the form of education that I put out. Do some research on it. Take it to your advisor and see if it fits you, if it fits your profile, if it fits your life stage, does it fit in with your financial plan and the goals that you have for your life. So the whole idea behind these kind of trainings is for you to understand what's out there. You don't have to stick with the old, cold, and boring investments. You can get into the exciting stuff like I'm going to explain right now.
Raising financially savvy children involves teaching them a variety of skills, from budgeting to planning to earning and saving. Besides giving them an understanding of the value of a rand, it prepares them for real-world finances. Financial literacy is a vital skill, and it is never too early to teach your kids about money. Many parents wonder how they can teach their kids about money, and where to find age-appropriate resources. You can now purchase the Financial Literacy for Kids workbook, which is aimed at primary school kids. It's now available at www.financiallyfabulousfemales.com. This workbook provides you with 12 lessons, activities, lesson plans, discussion points, and quizzes that you can use to test your kids' knowledge. Shop now at www.financiallyfabulousfemales.com.
Like what you hear so far? Make sure you never miss a show by subscribing on Apple Podcasts, Spotify, or Tuned In. Now back to the show.
So these 5 investments, all offshore, all can be accessed from a South African platform. And if your advisor cannot do that for you or do not have access to it, because not all advisors have access to these kind of investment funds, reach out. It's Yolanda at financiallyfabulousfemales.com. Also, you can go onto our brokerage website. It's www.solomonwealth.co.za. Click on the Get Started button and reach out, and somebody will assist you. So, enough rambling on from my end. Let's talk about those investments funds. And the first thing that I want to talk to you about is my favorite, and you'll hear it, or if you're following us on the various social media platforms, I'm always talking about this. It's the S&P 500. Now, we spoke about this last week, and I said that S&P, Standards & Poor, are the ratings agency that downgrades us every couple of months or so. So Standards & Poor, they're a data company. They take all of the information and they make recommendations from this information. And one of the things they track is the top 500 companies in the United States. So the objective of the S&P 500 is to provide simple access to investors who wish to track the movements of the S&P 500 index through investing in physical indexes. So the fund consists of the top 500 companies in the United States, and that basically gives you coverage of 80% of what's available in the United States. So what happens is the fund manager basically in this portfolio basically tracks the index closely as possible and most feasibly as possible by buying the securities or the assets included in that index at a similar weighting as they are included in the index. So if we find that Apple makes up 10% of the S&P 500, this fund will go and buy those assets to match the exact S&P 500. Now, you can go directly to the S&P 500 via U.S. investment company. Then you're using your offshore allocations, like I mentioned. Or you can go through a South African conduit directly into that market and take that risk and take those kind of gains as well. So whenever this index gets rebalanced, the portfolio will then purchase the newly included securities and will sell whatever has been excluded from the index. So the risk profile for this sort of portfolio, the S&P 500, is very high risk. So 100% of this fund is allocated into U.S. equities. And when we say equities, we're talking about shares in American-based companies. Well, because it's U.S. equities, it's shares in American-based companies. And because it's equities, it's very high risk. So what this fund invests in is IT, healthcare, consumer goods, financials, communication providers, industries, consumer staples. Now, every fund manager, they'll just give you a highlight like that. They can't tell you exactly what's in their portfolio because that's their secret recipe. We can't really go to KFC and ask for the recipe, right? So it's the same kind of thing with the fund managers. So ideally, you want to invest in something. If you're purely into the S&P 500, you want to hold this investment for at least 5 years plus. Okay, it's not a Regulation 28 compliant, meaning that if you do include this in your retirement portfolio, the portfolio has to be balanced to meet Regulation 28, which basically stipulates that not more than 30% of that retirement fund can be exposed to any investments offshore. All right, so you can include this into your retirement annuity, but the portfolio will have to be rebalanced. So the second index I'm recommending is the MSCI MSCI World Index. Again, another high-risk portfolio. And the objective of this portfolio is to track the MSCI US Index as closely as possible. High risk, passively managed because the exchange of securities only happens when the index actually changes in the United States. So the World Index, 66% of this fund is in the United States, 7.5% is in Japan, 3.4% in the United Kingdom, 3.3% in France, and about 18.5% or so is basically split up with the other emerging markets. This, if you're looking to invest globally and you're not sure which country, which segment, which sector you should go into, this is a nice sort of investment for you because it gives you a nice global view into shareholding in different global companies and representing companies with a very high market capitalization of approximately, the total market capitalization of this fund is around $30 trillion US dollars. So if you're looking for those kind of high returns and you're willing to tolerate the volatility, and this is very important, the volatility and the risk, you must be able to stomach it before you jump head first into this sort of investment. Again, because it's high risk, you want to be in this kind of investment for 5 years. And this can be blended as well. And when I usually structure portfolios for clients, 20% goes into one of these 5 segments that I'm recommending to you. And I balance it off with conservative or balanced funds as part of the client's portfolio. And again, because everything is offshore, the fund is not Regulation 28 compliant. So my next recommendation is the MSCI Emerging Markets Fund. Now, clearly, this is emerging markets into the developing economies. And this fund basically tracks the global equity segment across a variety of countries, a variety of sectors, and individual shares as well. I'm going to explain the breakdown of this fund by the sector. And 33.7% of this fund is into IT. Then is 27% or so is in consumer discretionary. 17% is around in the communications companies. 11% in financials. 3.9% in materials. Then it's the energy sector, minute at 3%, and healthcare at 1.9%. So these emerging markets, countries that fall into the emerging markets category are countries like South Africa, Turkey, India, Russia, China, Brazil, Argentina. These are the emerging markets after the United States, most of Western Europe. Then you'll find the emerging markets just coming in and trying to compete with those first world powers. Again, and if you read a lot or you take in content about finance and just the whole global shift, everything's moving east. And you'll see, and there's always talk about China and India being the superpowers in terms of the economic prowess that it has and it commands, like how the US does now and the UK does now. The future is going to be China. Well, China is almost there, and then it's going to be India. So exposure into these markets early o'clock is going to help your cause. All right, and the fourth fund that I'm recommending is FANG. And I know when you're thinking FANG, you're thinking like Dracula and those big fangs. But in the investment world, FANG is an acronym for the 5 most popular tech companies, which are Facebook, Amazon, Apple, Netflix, and Google. While Google's parent company is Apple, Google is a better known brand for investors. So this kind of fund aims to deliver long-term capital growth. And if you are somebody who wants to gain investment exposure into technology and technology at the forefront, these are the people that are performing right now. So as you can tell, because it's FANG, this fund is all into Facebook, Apple, Amazon. There's even a 11% holding into Alibaba, a portion into Microsoft, also Twitter, Chinese Baidu, Netflix. So there's a whole range of tech stocks, social media, entertainment stocks that this fund is investing in. Again, not Regulation 28 compliant, But if you're looking for that diversification, you want to invest in that kind of tech sector, and you're willing to stomach the volatility, you're looking for that long-term capital growth, FANG is for you. And again, it can be part of your retirement savings. Just balance your portfolio to make sure it's Regulation 28 compliant. Well, it's not going to go through if it's not Regulation 28 compliant anyway. But you can rebalance at the various life stages. And lastly, my fifth recommendation into index funds that you need to include in your investments is the fourth industrial revolution. Now we hear our president speak about this, but what is it really? So this fund basically invests into industries and companies that are more aligned towards the industrial revolution, the fourth industrial revolution. So this includes technologies such as autonomous vehicles. We see Tesla. Tesla will be a good example of this because they're coming out with these self-driving cars. And even you get the regular cars that will parallel park for you as well. So that is kind of cool. The technologies such as clean energy, drones, 3D printing, nanotechnology, smart buildings, robotics, cybersecurity, space and wearables, smart buildings, virtual reality. So these are the kind of shares that this fund aims to hold. So the term Fourth Industrial Revolution basically brings together the physical, the digital, the biological worlds in one sort of space. So the goal of this fund is basically to track the Kensho New Economy Indexes. So these are the 21st century sectors, and it's a series of market indices designed by Kensho, which is a US-based data analytics company, very similar to Standards & Poor's, to capture exposure to companies that are involved in such industries that are just propelling us into the fourth industrial revolution. So again, this fund, all offshore, the allocation is into global equities. So, when we say equities, we're meaning shares, and global is all happening overseas. So companies that this fund invests in include Oxford Sciences, Riot Blockchain, 3D Systems, General Motors, Tesla, Ambarella, Nano Dimension, Microvision. So like I said, these are just a few, and it's all 5% and below. So there's tons of other companies that this fund is investing in. And because everything is offshore, it all happens offshore. It's not Regulation 28 compliant. But what you should know is that you can invest in this fund in a tax-free platform. In fact, all of these funds, you have access to it in a tax-free platform, which will allow you to have access to international markets. And we've spoken about some of the companies that you will have exposure to. So from a South African platform, access to overseas markets, growing at the overseas rate. Also, you're taking the risk and volatility that comes along with that as well. So these are my 5 recommendations. It's FANG, the emerging markets, it's the World Index, Fourth Industrial Revolution, and the S&P 500. So speak to your advisor about these guys. See where you can rebalance and include these. Do some research on your own before you take any of my advice. And also, if you don't have a financial advisor, if your financial advisor doesn't have access to these sort of funds on a low-cost platform, on a unit trust or ETF platform, please reach out. Solomon Wealth, we provide those kind of services, low-cost investment solutions for you guys, and I will be happy to help you out. Also, look out on Facebook and Instagram, all our social media, a new resource, investment resource, a free ebook that we're releasing this week. So look out for it. We'll make announcements on social media. All right, so that's it for me on this episode of the Wealth Nation podcast. I'll talk to you next week.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.